Hi there, I'm David from DEB Chartered Accountants. This video considers what a business owner can claim as tax deductible food. Whether tax can be deducted for the cost of food has been a source of many disputes with HMRC over the years. These days the position is clearer, although still not trouble-free. The rules which determine whether a tax deduction is allowed are differing depending upon whether you're an employer, an employee, or you're self-employed. The concept of wholly and exclusively. The contentious aspect relating to meals in the past was due to the concept known as duality of purpose. The tax rules prohibit a deduction for expenses unless they are wholly and exclusively for the purpose of the employment or the business. As food is required for personal reasons, you obviously need to eat to live, then it inevitably fails the wholly and exclusively test. However, practice and case law eventually settled on an imprecise compromise where HMRC would allow tax relief for the cost of the food where it was linked to a business journey. And eventually this was refined and incorporated into the tax legislation. So what about self-employed and partners? To regularise tax deductions for the cost of food, legislation was introduced. This established the rule that if you incur expenses that are in the course of business travel, for which you are entitled to a deduction for them, then you're also entitled to a deduction for the reasonable cost of food and drink. The position for employers is simple. If they pay for the food for the employees, including directors, then it's tax deductible from their profits, even if it's for staff entertaining. The other side of the arrangement is that the employee may have to pay tax and employees' national insurance contributions on the cost incurred by the employer, whilst the employer in turn must also pay employers' national insurance contributions. However, there's no tax or national insurance payable if the employee would be entitled to a tax deduction if they had incurred the expense themselves. So what about employees and directors? For employees and directors' deductions for subsistence, they broadly reflect the rules for the self-employed. The legislation for this is incorporated into the rules relating to the expenses incurred in respect of job-related travel. In short, if there is tax-deductible job-related travel, then the cost of the food and drink for subsistence is also tax-deductible if incurred by the employee, and as such, this is not taxable on either the employer or the employee if the employer were to pay it. So, in summary, as a self-employed individual or a business partner, no tax deduction is allowed for food, etc., unless it's combined with business travel. The same is true for employees and directors. However, if their employer meets the cost of the food and drink, they are entitled to a deduction, but the employee director has to pay the tax on the same amount. Scale rate payments. If you provide your employees with a set amount of cash to pay for some common business expenses, like travel and meals, then these are known as scale rate payments. As long as your employee has actually spent the scale rate payments on business expenses, you will not need to check every single receipt. HMRC say that it's fine for you to just check a sample. You can set up a scale rate payment by either agreeing a scale rate with HMRC by providing evidence of typical expenditure, or by using HMRC's benchmark scale rates for subsistence costs. You must report the scale rate payments on a Form P11D, unless they are no more than the agreed scale rates or benchmarked scale rates. This means you don't have to include them on your year-end P11D reports where the payments don't exceed these amounts. You don't need to deduct or pay any tax on national insurance when reporting scale rate payments. Employers wishing to pay or reimburse expenses may use the benchmark rate set out in the Income Tax Approved Expenses Regulations without needing the prior approval from HMRC. The regulations set out the rates which employers can use for payment or reimbursement of employees' expenses where the relevant qualifying conditions are met. These rates are the maximum tax and national insurance free amounts that can be paid by employers who choose to use the system. An employer can pay less than these amounts if they want to do so. If a higher payment or expense reimbursement is made, without agreeing a bespoke scale rate with HMRC, any excess over the published rates should be subject to tax and national insurance contributions. The rates are set out as follows. If the minimum journey time is 5 hours, then the maximum amount of the meal allowance is £5. If it is 10 hours, then the maximum amount is increased to £10. Where it is 15 hours and ongoing at 8 p.m, then you can pay £25. Where a scale rate of £5 or £10 is paid, and the qualifying journey in respect of which it is paid lasts beyond 8 p.m, a supplementary rate of £10 can be paid to cover the additional expenses necessarily incurred as a result of working late. A meal, for this purpose, is defined as a combination of food and drink. Where employees are required to start early or finish late on a regular basis, the over 5 hour and 10 hour rate, whichever is applicable, can be paid providing that all the other qualifying conditions are satisfied. So what are these qualifying conditions? The benchmark scale rates must only be used where all the qualifying conditions are met, and these are: the travel must be in the performance of an employee's duties or to a temporary place of work on a journey that is not substantially ordinary commuting. The employee should be absent from his normal place of work or home for a continuous period in excess of 5 hours or 10 hours. The employee should have incurred a cost on a meal, that is food and drink, after starting the journey and retaining appropriate evidence of their expenditure. If you use the benchmark allowances, then it's important that you ensure that these conditions are complied with. Even though you're not required to retain receipts to substantiate the expenditure, your employees are. So it's important to ensure that you retain evidence of your testing that the employee is in fact incurring the cost, so that this can be produced should HMRC come checking. If you would like more help with this, please don't hesitate to give us a call on 01226 245824 for a free, no commitment meeting. Thank you for watching this video, and if you've not already done so, please subscribe to our YouTube channel so that you'll get notifications whenever we upload further videos. Bye for now.